Hello. In this video, you'll learn how payroll accountants determine Social Security and Medicare tax withholdings. The Social Security Act of 1935 mandated the withholding of certain taxes in addition to federal income tax. There are two different taxes that are part of the Social Security Act of 1935. There's Social Security tax, and then there's Medicare tax. These taxes are collectively known as FICA taxes, which stands for Federal Insurance Contribution Act. And both the employer and the employee contribute in equal parts to this tax. Social Security tax was formerly known as OASTI and was designed to cover people for illness, retirement, disability, and old age. In general, an eligible individual must work for 10 years or have 40 credits to be able to draw on Social Security. The Social Security tax is paid by both employer and employee and is levied upon employees to a maximum wage amount that increases each year. In 2022, the wage base is $147,000, and that is what our textbook is using as well. This means only the first $147,000 of wages earned are subject to Social Security tax. Every dollar earned above $147,000 will not be subject to Social Security tax. In 2023, the wage base is $160,200, and in 2024, the amount is projected to be $167,700. There are currently discussions about implementing a special high-wage earner Social Security tax, whereby those who earn above $400,000 are taxed an additional Social Security tax on those amounts above $400,000. The Social Security tax is 6.2% on eligible wages. Remember that taxable wages can be different from gross pay because pre-tax deductions and the wage base maximum. There's an exception though. When an employee has multiple jobs in the same year, each employer withholds Social Security taxes. However, the employee's excess contributions is counted as federal income taxes, which means that you get credit for it on your annual tax return as if you had paid federal income tax. However, the employer's contribution is not refunded. Let's take a look at how you would calculate the Social Security tax in the following example for 3 employees. Employee number 1 has a period wage of $3,500 and had 42 prior pay periods for a total wage of $147,000. During the 43rd payroll period, the employee hits the maximum wage base for Social Security of $147,000 for 2022 and $0 of the wages for the 43rd payroll period are subject to Social Security tax. Let's look now at employee number 2, who's paid a biweekly wage of $5,850 and has earned $146,250 year to date. That means that for the current payroll period 26, only $750 are subject to Social Security. What about the next employee? Employee number 3 is paid $6,800 as a semi-monthly wage and has earned $142,800 year to date. That means that of the current payroll period number 22, only $4,200 are subject to Social Security. Let's now look at the second part of FICA, which is Medicare tax. Medicare taxes provides basic health coverage for all individuals who generally have worked and paid Medicare taxes for 10 years or have a spouse who meets this requirement. There is no maximum wage base for Medicare taxes, and the tax rate is 1.45%. This tax, just like Social Security, is paid by employee and employer. In addition, the Affordable Care Act of 2010 levied an additional Medicare tax of 0.9%. On certain workers who earn more than 200,000 if they're single, 250K if they're married and filing jointly, and 125K if they're married and filing separately annually. This additional tax is only levied on employees. So important, employers do not pay this additional percentage. Our textbook is only using a threshold of $200,000 for simplicity. So please keep in mind that this is an additional tax on high wage earners, but there are no additional services that these individuals receive when they enroll in Medicare for the additional tax paid. Let's talk about eligible Medicare wages. So eligible Medicare wages are gross pay less pre-tax deductions, such as Section 125 deductions for health insurance. Just a reminder, the 401k deduction is not allowed as a deduction in calculation of eligible wages for FICA taxes. So here are some examples for the calculation of Medicare taxes. Sam is a security guard for a local facility. He earned $1,355.50 during the most recent biweekly pay period and has earned $21,688 year to date. He's married, filing jointly, and claims two dependents under the age of 17 on his 2021 Form W-4. He has no pre-tax deductions. What is Sam's Medicare tax liability for the pay period? Well, first thing to remember is that the Form W-4 is for federal tax withholdings, and the dependents do not impact Social Security and Medicare tax withholdings, so ignore them. So we can start with calculating the Medicare wages by first looking at the wages per pay period and whether there are any pre-tax deductions. In this case, there are no pre-tax deductions. So the calculation in this case is $1,355.50 multiplied by 1.45%, which equals 19.65%. In the second example, Ina is a single full-time exempt employee who earns $232,500 annually and is paid monthly. Her year-to-date pay as of November 30th is $213,125. How much will be withheld from Ina for Medicare taxes for the December 31st pay date? This is an example when an employee is subject to the additional 0.9% Medicare tax withholding. So what's the first step? The first step is to calculate the regular Medicare tax withholding by first dividing the annual salary by 12. Because Ina is paid monthly, and then multiplying the result of $19,375 by 1.45%, which is $280.94. We then multiply the $19,375 by 0.9%, for the additional Medicare tax withholding, which is $174.38, for then a grand total of Medicare tax withholding of $455.32. Here are four more examples. Shoshana is a salaried exempt employee who earns an annual salary of $61,175, which is paid semi-monthly. She's married, filing separately, and claims two dependents under 17 for her 2022 Form W-4. What is her total FICA tax liability per pay period? When you see that question, when you see that the question asks for the FICA tax liability, that tells you that we need to calculate both the Social Security and the Medicare tax. We need to also double check that the wages are below the maximum Social Security wage amount of $142,800, which Shoshana's wages are. So we'll start by dividing the annual salary of $61,175 by 24. There are no pre-tax deductions, and that is why we then multiply the result of 2,548.96 by 7.65% for a total of $195. Why 7.65%? Because Social Security is 6.2% and Medicare taxes is 1.45%. What about the next example? Paulo is a part-time security guard for a local facility. He earned $498.50 during the most recent weekly pay period and has earned $6,176 year to date. He's married, filing jointly. What is his Medicare tax liability for the pay period? So to calculate the Medicare tax liability, we would multiply the gross wages, because there are no pre-tax deductions, by 1.45% to arrive at 7.23, so $7.23. In the next example, Renee is a salaried exempt employee who earns an annual salary of $50,160, which is paid semi-monthly. She's married, filing separately, and claims dependents per her 2022 Form W-4. What is her total FICA tax liability per pay period? Just like we did in the first example on this page, we divide the annual salary by 24, because Renee is paid semi-monthly, which results in $2,090. And then multiply the 2,090 by 7.65%, we get the FICA tax of $159.89. The last example is the same except for the salary of $64,200. So we divide the salary by 24 with a semi-monthly wage of $2,675, and then multiply it by 7.65% for a FICA tax liability of $204.64.